Hey, it's Mac with PriceActionTradingSystem.com, and it is Wednesday. Yes, today's Tuesday. I'm sorry, Tuesday, October 3rd. This will be our chart lesson for the day. And sorry, It's been a kind of a hectic day. I'm trying to get everything wrapped up before I leave for my vacation. I got a million things going on around here today. But anyway, wanted to talk about the chart lesson. Won't take very long. It's a relatively flat day. In the end, it's much like yesterday. We went sideways for a little bit, and then we rallied higher yet again. Not a lot of movement, but here's that little famous break lower that a lot of times if you catch a major low of the day, and notice how if you caught this, you got a nice ride today. This is really all you needed. Other than that, there wasn't a whole lot, to be honest with you. So you just kind of had to. I mean, it gets really sticky entering. You definitely don't want to go short into this stuff, so you're looking for a chance to go long. And I drew an arrow to this one. Somebody asked me about it. We'll talk about it in a minute. Um, but this is not going to take long, and then I'm going to wrap it up. And again, I'll be gone the rest of this week, so I'll only be answering emergency emails when I can, and that's going to be limited. So if you would hold your questions on trade questions and things like that until I get back, please, just so I don't come back to 100 emails or whatever, 500 emails. But anyway, yeah, we'll talk about today and it won't take long. And I'm gonna wrap it up and get this uploaded, and I'm gonna cut out of here early so I can go home and get packed up and get my stuff ready to get leave town. But anyway, when I came in, we traded up. We had a close outside, and we tried to go higher once, and then tried to go higher twice, and that's your double test after a break of this trend line. So I like going short right there. You didn't get to ride this one all the way down, but it was good for a scalp. Um, and then I actually skipped over this one, but um, you might have attempted this one, because really you tried to go higher here once and then you moved down, you tried to test it again. So technically that's a double test rule after a break of the trend line and so forth. And look how many times you tested that. And that's only like 4 ticks there, 3 or 4 ticks. So you might have risked that one. And if you did, I would add on here. If not, just enter here and you got your trade. There's a lower high here, but by the time this bar ends, it's right into these lows here. And plus, it just kind of jumped. You really didn't get a chance to enter that. You don't want to be entering way down here. So you just have to skip that one. And of course, it bounces. It's really tempting to go long here because it's only like 3 ticks. But this is not a given support area yet. Your support at that point was really down here. So this is the first time. You don't have a lot of evidence that, and your other support was right in here. So you don't have a lot of evidence here. So you really got to skip that. And it comes back up. And I'll be honest, this one you could almost argue to be green. I like this trade. It's 3 ticks. It's about the third or fourth time we've tested that level. It's a little small bar. Only problem is you got a little trend line working up here and you've had no break or close outside of it yet. So you're better off to wait on a lower high. So your lower high comes here and it did not tick higher, which I would have liked if it ticked higher and turns, but that's still really bearish. And that's just showing you prices couldn't even tick up above a nice bullish bar. That's showing some bearishness. Most people recognize this is a range here, and they're all getting short right here. That's the bottom line, and then it runs down. You definitely don't want to go long here. It's just really just now starting to show some support down here, and so this technically is a double test of this area, but you got this trend line coming down, and that's the first break of it. So generally, you want to wait on prices um, to test that, to try to go lower twice, because that's what they usually do. The market moves in twos, so even though it didn't get a new low there, it's probably going to try again. And so if you went long there, you probably would have got stuck in this and then stopped out right here, only to watch it go higher. So generally, you're better off to wait and treat this as the double test. And of course, prices never broke higher until this bar. And by that time, now you've got a double test. Now you've got multiple bounces here. So even without this being a double test, just the fact that we've tested this bottom so many times, and it's a fairly bullish bar, letting you get in very near the low, and you got a little failed break lower. This is the one you want to enter in. If you entered here and it just kept going sideways here, I'd probably exit and take what it would give me. But really, at this point, you've only had 3 bounces here, so it's just now starting to tell you that, hey, this is probably the new support area. And you know, once you tested a couple more, now you've had one, two, three, four, 5, 6, 7 different bars testing that. But at this point, you really only had a couple of tests of it previously, and so I can see why you'd like that one. We don't have a new low in place yet, though, and you really would like to see the double test after the break of that trend line. Although that's not, that's not written in stone. That's just something else you can use to help filter the trade, and you don't have that yet there. So, and you can see it's easy to see now, but this was the ideal place to enter, of course, when you actually got the failed break lower. Plus, if you tried to enter here, you only had this right here to this high, but of course, if this is a range and you're reading it right, you're probably headed up to here, but you just don't want to be too early. You can't be late and you can't be early, and there just wasn't enough evidence that prices weren't going to try to test this low yet, because there's really your overnight low. Turns out it holds, and off it goes. And notice what happens. You got a new low here, and you got a first entry. So this is a failed second entry short to begin with. But if you draw this trend line off these highs and drag it down, I mean, that bounces right off the trend line. It's a failed second entry short. It's a breakout pullback long. Nice bullish bar. That really confirms your trend line, because really you came back and tested it a couple of times here. And so that's like your third touch. Maybe even your fourth touch. And so I like that one. And your hope is that you're going to get a measured leg just like that. And guess what? That's exactly where prices go to. Maybe actually one tick further, and now it looks like we're trying to sell off. So you could actually treat this like a double bottom, and then that would have been a failed second entry short. And notice that was another good trade. That's after 2 o'clock, but just showing you that the trade's still there even after 2 o'clock. But and another thing you would do too, obviously, that I didn't even mention. Sometimes some of this stuff I just forget is so obvious, but I forget that not everybody. You would look for your measured move there too. And that would have been a target as well. And you can see we went a few ticks higher. We actually got a measured leg up there, but you'd want to have that there just in case. So, and it's just an equal distance of what your first range was. And probably if you measured this from down here, I always like to use the closes, but because it's going to get you there. But if you measure that right there, and then move this over here, that basically gets you there within one tick. So just something else to think about. But generally, I always just measure. I like to use the closes. You're going to be closer, and you want to be a little bit conservative anyway, and that gives you a little bit of conservative room. So if you get out one tick in front of that, then you get out within 3 ticks of the high. Of course, we may still go higher yet. We'll have to see what happens here. But by doing it this way and you're exiting at a measured move, then you're basically getting out, at this point, 1, 2, 3 ticks from the high. And, that's about as good as you can get. You can't be too greedy. If you want to try to squeeze out every tick, you're going to get burned more times than not. So, but yeah, that's pretty much it today. And I'm not going to beat around the bush. I'm going to wrap this up. Again, I'll be gone the rest of the week, so no more chart lessons this week. No more. There won't be any mid-morning charts of mine posted on the website either. I hope everybody has a great week. Hope you have a great weekend. I'll be back Monday, and we'll start over again. But I'm done for the week. I'm done for today. I'm going to wrap it up. And again, please hold your emails unless you have an emergency. I will check the email, and I don't know how. I'm going to be on a fishing trip, and we're not staying in a hotel. We're staying on a houseboat down in the bayou and down on the coast of Louisiana. So I don't even know if I'll have internet or what kind of internet access I will have for the next couple of days. So if you don't hear from me, don't panic. I'll take care of it as soon as I can, and I will try to check email for emergencies while I'm down there. But if you would hold anything that's not critical or emergency until I get back, it would be greatly appreciated. Uh, Good trades to everybody, and we will see you next week. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.